What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day. Monday, April 15th. Alright guys, Nvidia stock on Friday finished the day down $24.30 a share. That's minus 2.68%. It has faded about, six and a half extra dollars here in the after hours. Understand, volume during that time is going to be incredibly low. So listen, we have to, even if you're positioned short, it confirms your bias. We have to make sure that we're taking that with a grain of salt, because look, volume is you can't even almost see it. It's very low in the after hours. Stocks are very easy to bully during that time. Let's take a look at everything we can possibly get here out of Nvidia, everything the market was willing to give us here today, starting with a bias analysis of the volume profile here on today's red day on the 5-minute chart. Now, the moves that I'm primarily interested in here from today, Friday, on Nvidia, I want to take a look at this dip and recovery. All right, I suppose we'll also take a look at this little bit of a fall and small recovery, and then this little bit of a move into the close. I just want to take a quick look at all three of those. If we see here, we're seeing a few pops in volume on the red bars as the stock came in on that fade, that pullback, kind of mid to late morning here. And, I suppose there's an argument to be had here for bearish bias when you compare it to the volume on the green side, the recovery, right, being a little bit lower on average. But again, it's not like we're looking at 4 to 5 consecutive elevated volume red bars. We're simply looking at a couple of outliers. So if there is bearish bias there, which I think there's a slight amount, it's going to be very small. All right, now this downside move in small pop, very contextual volume list, and there's nothing there, so let's not waste our time. Heading into the close, we saw this move to the downside that got pretty aggressive into the intraday lows during the regular trading session. And then we bounced, relatively aggressively, I suppose, for, compared to the rest of the day, into the close with a small couple of bar fade into the close. But if we look here, we saw a little bit of elevated volume here, right, as we kind of entered that intraday low or hit that intraday low, but it wasn't incredibly substantial. It was kind of just that closing arc. We typically see that volume start to taper up into the close, starting a little bit early. All right, and then as we moved into that upside move, we got a couple of pops in green bars, a little bit of randomness. To me, this kind of offsets each other to the point where it's essentially a net neutral. And then into the close, very contextual. This big red bar, I know a lot of you bulls are looking at that looks scary. Understand that on most big blue chip stocks, like the S&P or SPY more so, we usually see this bar right before the closing bell. But on most of the big blue chips, Nvidia, Tesla, etc., we tend to see a really high volume bar immediately after the closing bell every single day, and almost never, sometimes it will, but most of the time it doesn't contribute to a lot of actual price movement, because what this is fund and institutional rebalancing, most likely being done by algorithms that trigger upon the market closing. So you end up with this massive volume battle bar of a lot of buying and selling, kind of arbitrary buying and selling, as these firms rebalance their portfolios, do whatever needs to be done, and you just end up with a lot of both sides pumping up the volume that leads to very little movement. So for me, I tend to ignore that bar, at least in the context of how we saw it here on Friday. Let's move on now to the psychological self-fulfilling prophecy levels that we need to pay attention to here on the 30-minute heading into Monday. All right, now if you guys recall Thursday's NVIDIA video, we talked a lot how we saw a really strong reclaim here of the 200 period here on the 30-minute chart. That's a really strong psychological level. We gave up the 50 period. The 50 period's a really fast moving average on the 30-minute. So that kind of got ripped upside here on Friday, and then the stock gave it back up on the fade back downside, back below 9, which we'll talk about here. We ended up holding the 200 period here on the 30-minute, but we're sitting right up against it in after hours. Again, take after hours with a grain of salt, but it is, of course, the real price, so we have to take a look. So look, come Monday, if I'm a bull, I want two things to occur, ideally. A hard bounce on big volume upside away from the 200 period, right? We're kind of testing it right now. Just confirm that with a bounce ideally. And then utilize that best case scenario, at least on the 30-minute in particular, to reclaim the 50 period. Though it wouldn't surprise me if we end up seeing this 50 period continue to move sideways or even fade back downside given Friday's move here. If we see that occur into Monday, that'll actually require less of an upside move out of the stock to reclaim that, which puts us in a good psychological position, not just necessarily based on price, but based on the psychology of the chart. And this chart is very bare bones for a reason. I have 2 moving averages, and the volume. That's about it. Because I'm not after, I'm not after magic. I'm after what is everyone else seeing so I can analyze the psychology. That's how TA becomes effective, at least in my opinion. And listen, if you're a bear, it's really simple for you guys. A crack back downside below the 200 period and getting that 50 period, the white line, right, to curl over aggressively and hard move downside to move to the downside hard. Ideally getting back below the 200 period even, just for the sake of having a quicker moving average, being able to follow the stock and keep a psychological barrier back to the upside close to the price, right? That 50 is usually going to be your friend in that scenario on both sides of the ball because it's so fast moving. Today, though, unable to hold it here, for the bulls. Now, let's take a look at the 4-hour and see what's going on over here. You can see we had a similar conversation on Thursday about the 4-hour. We saw a really nice crack upside, but we never really got that retest, and we touched on that. Well, today we got the retest, and we held it off for maybe one candle, just a little wick here. We held it off, and then we inevitably ended up giving it up back to the downside. So listen, bulls, again, really simple. A reclaim of the 50 period would be my best case scenario on the 4-hour now in particular. Of course, as we go through the time frames, like seeing, for example, you take the bullish scenario, seeing it line up on all the time frames, that best case scenario, that is the all around best case scenario. But that's why we look at, the 30-minute, the 4-hour, and the daily, those 3 charts individually, right? So we can piece this together. But when does the easiest quote unquote movement to the upside, and I suppose vice versa to the downside, tend to happen on these stocks? Not even just Nvidia, but these stocks in general. Well, it tends to happen when the 30-minute, 4-hour, and daily, and really as many charts as possible, are looking similar, and that the stock is, in the bull's case, above both the 50 and the 200, because those are by far the 2 most popular, and it's expanding, respecting the 50 as a support level, and pulling both upside as it bounces off the 50 in an ascending trend pattern, right? That is kind of like an open sky setup, and then really all you have to worry about to the upside are those psychological round numbers and some technical levels. That's a good position to be in as a bull, and take all that and flip it to the downside. That's exactly what you want if you're a bear. Here in this chop where we're taking levels and then giving them up the next day, it's not ideal. It adds a lot of psychological barriers that we don't need to have or we don't want to have for the ideal situation here. So again, one step at a time, bulls, just a reclaim of the 50 period here on the 4-hour and an actual hold. Again, sloppy test today and just gave it up quite easily. That's what I want to see on Monday. And if you're a bear, obviously, if we retest that 50 period, we never really saw an actual retest in the actual session, like the regular trading hours. So a retest of the 50 and a rejection on big volume would be a good thing for you guys to see as bears. And then, potentially, we currently find ourselves, based on the after hours price, about 2%, 2.06% away from that 200 period. Getting beneath that, if you're a bear, would be even better. All right. Now, the daily, guys, this is the big story, always. All right, the daily has the most eyeballs. It's the clearest picture. It's the easiest to see, which means it has the highest probability of really falling into that self-fulfilling prophecy mindset, I suppose. Now, when we look at this chart, bulls, things don't look too bad, do they? That big channel is 850 to 9, right? The 50-day moving average is at 825, that white line. It's not really immediately relevant. So, if you look at this, really the nearest big in-play level is still $900 a share, right? And we currently find ourselves from about 881. This is the closing price, right? Not the after-hours price. But based on that closing price, we're about 2% away or so. Now, in the after-hours, we're about halfway, right? In between 850 and 9. Based on the closing price, there is a slight upside bias, a little bit closer to that $900 region. But listen, guys, on Nvidia come Monday, this is a toss-up here. You know, because we've been talking about this channel 850 to 9 a lot. It becomes more and more clear the longer this stock trades. You know, we've had that level drawn, or that channel drawn more so, since well before these last few trading days. But Nvidia is clearly not going to trade between 850 and 9 forever. And we've already been in this channel for, you know, on and off for a little over a month now. And, you know, it's time for this thing to pick a side at some point here in the near future. So bulls, my eyes are set on a reclaim of 9, right? Ideally as soon as possible. And we know what Nvidia is capable of in a single day, so we have to take a look at that as a possibility. Bears, 850, right? Now, in my opinion, bulls have a slight advantage. Why? Because after a reclaim of 9, what's the next thing that the bulls have to worry about to the upside? Well, really, it's like that all-time high at $1,000 a share, which leaves us with a pretty open sky setup. Bears, right? What do you guys have to worry about? On a break downside at 850, to get anything else, now you have to go through that 50-day moving average, which is already at 825. And depending on how quickly we see a downside break, even if it occurs in a single day, that 50-day is likely to be a little bit higher than 825, or even approaching 850 if it takes a little bit longer. And that's just another psychological barrier that you guys have to go through pretty much immediately upon it breaking hold of 850, whereas bulls, they don't really have the equivalent of that. They don't really have to deal with that as much. You could argue, okay, we've seen a couple of rejections off 925, but in my opinion, it's really nowhere near as relevant as a 50-day moving average that the entire world is staring straight at. Okay, now implied volatility, it did bounce a little bit. Again, still sitting low. Okay, so if you've seen some IV crush in your contracts, that's the culprit. But again, when IV is super low in your intended trade time frame, that does improve conditions for new options traders to come in and buy new contracts. Now, the expected move. Okay, if we take a look here, you can see that, you know, we don't have earnings coming up until May 22nd. Okay, so for the next week, we don't have to worry about that. And that does, you know, that comes into play here when we look at the expected move. So the next expiration that we have is going to be April 19th. Now that's next Friday's close. The expected move by next Friday's close, and don't you worry, I'm going somewhere with this for Monday, is plus or minus $42.62 a share. That's what the market currently expects in terms of difference from Friday's closing price here to next Friday's closing price. A plus or minus move of $42.62 a share. That's the one standard deviation expected move being priced in, you know, not by someone out there making a guess, but genuinely by the entire sample size of the market. That gets pulled from the implied volatility of each expiration. That is quite literally the market's opinion on the volatility expectation for the whole week. But we have 5 trading days. Now, since there's no earnings or anything, we don't have an outsized expectation for any one particular day to be like massively specific to Nvidia, more volatile than the other, right? Typically, it's just going to be an earnings event. So if we take that number and divide it by 5, the market's looking at $8.52 plus or minus of movement per day, but we're not done. That assumes a streak of green or red. So what I like to do is I like to add, at least in this market, and this will change over time, but right now I like to add about 50% to that. That gives us a plus or minus expectation by Monday's close that the market is expecting approximately, with a little bit of guesswork involved, $12.79 plus or minus per share. Okay, now understand that I think some people, you know, they hear expected move and they're like, well, plus or minus, that means nothing. By design, it's a technical term. By design, it does not include a directional bias. Everything we've done leading up to this helps us form kind of our own directional bias. That is a volatility bias, which is like the missing link. If you're trading options and you don't understand the volatility expectation from the market, you're missing a piece, right? You're reading half the page in the book and then flipping to the next page. You're completely missing the context and positioning yourself half blind. So it's really important to understand that, especially with options, but even with shares. Now, there's one more thing we can do here, my favorite part of the video, to take a look at directional bias. 1.92 million contracts were traded here on Friday, just Friday. 1.13 million calls 793,000 puts. So we're seeing a call side bias here on Nvidia from Friday. But if we take a look also at the short-term speculators, right? Those gambly style calls and puts with, on average, a much shorter term bias, the 0 to 20 delta range, 460,600 calls and 363,600 puts. So also seeing a bullish bias out of the short-term speculators as well. Listen, guys, Nvidia is a daily upload, at least every day the market's open. If you're getting value out of these videos, please subscribe to the channel. Also, listen, every single day, I'm, of course, working with all the members in the private server. The Platinum members, of course, I'm working with one-on-one. And, you know, Gold Plus you away. All a variety of benefits, but I'm sending out, you know, my personal scalp setup alerts, in-play stock alerts. Those in-play stocks, by the way, those are kind of by default, because they offer the most opportunities and they're the quickest trades. Those actually make up the majority of my intraday, like scalping, intraday trading volume. Then, of course, I'm also doing, I've been tracking UOA for years. I'm doing human verified unusual options activity alerts. I've been doing that for over 3 years now with the group, but I've been tracking it for quite a bit longer than that. That's kind of how I keep track of like what the whales are up to. And then again, my Platinum one-on-one group, working with them every single day. Listen, that link in the pinned comment, that'll let you get grandfathered in at the current rate. Hope to see you leave a like on the video on the way out. It helps out tremendously. And I'll see you in the next one.